right? Because capital is paid in capital, plus all those earnings that business didn't pay you because of future expansion or something else. The smart management is that why to give you dividend, because next year we also go to the bank and ask loan, and loan is not free. We need to pay interest. So in order to avoid interest, we are not paying you the dividend. We are using that dividend to expand our business, to buy some plants or something, right? But that earning belong to owners, not the outsiders, right? So that's why we use the word equity, right? In economics, equity means the fair treatment, but in accounting, equity means paid in capital plus all those earnings that are not given to the or not distributed to the owners. They kept retained by the business. Any question?
No.
Okay. So paid in capital, we have common stock, amount stockholders have invested in the corporation. And then we have retained earnings, amount earned and kept for use in the business. They didn't distribute it to the owners. They kept it with themselves. So pay attention to the name as well. Retained, that they didn't distribute, they retained into the business, right? So shareholder equity is equal to paid in capital plus retained earnings. Okay, now the formula for retained earnings. How you can find out the retained earnings? Revenue, which means sales. What are the sales? Sales are the inflow that increase the retained earnings by delivering goods or services. In simple words, the revenue or the income, the amount you received from selling the goods or services, we call that revenue. So revenue minus expenses, we call that profit. From profit, you decrease the interest. We call that net income. From net income, you less the dividend. So that is the detailed formula. But simple formula is that revenue minus expenses is the income, right? So income belongs to outsider or insider, owners or others. Who owns the business? Owners, right? So business should give them income. For liability holders, business pay them interest, but not the income, right? Income belongs to always owners. And who owns the company? Shareholders. We call that owners. So that part of income that is not distributed, we call that retained earnings, right? So what is the distributed? You give some and some you kept. How much you kept, we call that retained earning. So the general formula is retained revenue minus expenses minus dividend is equal to retained earning. If you completely, you didn't even give them dividend, then you put 0 here. Do we have the example here? No. Let's create the example here. So company sales are 100,000. Company expenses 80,000. How much is the income or profit? 20,000, right? And that 20,000 belongs to owners. You decided that, okay, we will just share you 500. So in annual general meeting decided that the dividend would be 500. How much you retained that income? Minus dividend, 500. It means 19,500 you retain into the business. So you can develop the logic here. Right, everyone? And I need to ask individually because that is very important concept. Aroni, you understand that?
Yes.
Chloe? Asian?
Yes, I guess so.
Just remember that the income belongs to owners. You didn't distribute it 100%, right? You distributed
Yes.
some of them. So that income that you did not distribute it, we call that retained earning.
Earnings. We keep it for the business. Okay.
We keep it for the business use or right, it's like that. The word
Okay, got it.
right?
Yes.
Jordan,
Yes, sir.
Junpyo.
Yeah, I just a little bit confused
Yeah, you can ask.
about the dividend. Dividend is supposed to be like 0 point something, right? But here I see you put dividend equal 500.
That is dividend ratio.
Okay.
Okay, that is some, for example, you distributed 50%.
Mhm.
It means you distributed 10,000.
Okay.
Right? Normally the dividend is announced in ratio terms. 20% of the earning, 1% of the earnings, like that. But
Yes.
I wrote it down in amount form. So that, okay?
Okay.
Min, you understand?
Yes.
And then we have Minsu,
Yes, I understand.
Junpyo.
Yes, sir, but can you please upload the PPT file on the Blackboard, please?
Yes, sure. After this class, I would be uploading all this. I have also, uploaded. I have uploaded on YouTube my previous semester lectures. So meanwhile, I would be, saving that file, converting it into some 15 minutes part, and then uploading to YouTube. It would take maximum 2 or 3 days, depending on my uploading speed. And also something, if I am able to upload today, I will share you the links. Otherwise, I would be sharing you the pre-recorded lectures that I already uploaded on the YouTube for last semester. The PPTs are the same. And also the explanation is pretty much the same, okay?
Okay, also can you please
Yeah.
us the PPT before the class? Because I think it will be more helpful.
Yeah, okay, sure. Sure, that would be a good suggestion. I would be doing that, okay? Okay, don't worry about that. And Misha?
Yeah, I understand.
Okay, Peng Peng?
Yes, sir.
Sipide?
Yes, I understand.
Good. Okay. So now question arises. Okay, this is the same one. Revenue minus expenses minus dividend, we call that retained earnings, right? It means if company is selling something, right? If revenue increase, look at the equation. Sale minus expenses minus dividend is equal to retained earning. If sales increase, the other name of sale is revenue, okay? So don't confuse with the two words. Sale and revenue are the same thing, okay? If revenue increase or sale increase, it would increase retained earning, right? What if expenses decrease? It would also increase retained earning. Look at the equation, right? Or look at the numbers here. 100 minus, for example, 80 minus 10. Answer is 10. What if expenses drop to 70. When you put 70 here, retained earnings becomes 20, right? What if dividend decrease? Dividend, for example, dividend is 5. When dividend is 5, what happened? Retained earnings also increase. So how the owner equity is impacted? If you control the expenses, it means you're going to be increasing the retained earnings. If you increase your promotional activity, marketing activity, your revenue going to increase. What happened? The retained earnings going to increase. If you decrease the dividend, we call that, if you decrease the dividend, the impact is you increase the retained earnings. So that is just the explanation of this. Revenue minus expenses minus dividend is equal to retained earning. So this is just the equation, nothing, rocket science here. So the complete formula is that how much retained earning is added this year. Simple. The formula for retained earnings, would be, so first of all, beginning retained earning, which is the previous year retained earning. If the business have a history, so you are retaining earnings every year, right? So this year retained earning, you can find it out through revenue minus expenses minus dividend is equal to retained earning. So that figure is current year, right?